Our goal is to lift LA County residents out of poverty and achieve greater economic security. You can visit our website, dcba.lacounty.gov, for resources, including sample budgets, resource guides, financial tips, and bingo programs, which provide free low-cost checking and saving accounts for consumers, and information about our free tax prep LA and VITA tax preparation services. So let's get into the material for today's presentation, beginning with what is credit. So it is borrowed money that you use to purchase goods and services, but it's money that needs to be paid back, and oftentimes with interest. A person receives credit from a credit grantor, such as banks, credit card companies, or lending companies, and they will have to agree to pay back the amount spent plus applicable charges at an agreed upon time. So oftentimes, a person will receive a billing statement with a due date and a minimum payment owed for the month, and the interest rate varies depending on which lender provided the credit. So what is the importance of credit? It is a useful tool when emergencies arise. For example, during heavy rains, your roof starts to leak and you need to pay for repairs, or you get a flat tire and need to replace your tire. If you don't have that cash on hand, it's helpful to put the expense on a credit line and pay it off. Credit cards can be more convenient than carrying cash, especially now that most places are going cashless. It's convenient because if your wallet gets lost or stolen, you can freeze your card and receive a new one and dispute any charges that aren't yours. Versus if you lose cash, you're not going to get it back. It's not insured, right? So credit allows you to make big purchases such as a house or a car and then pay them off over time. For example, having a mortgage or an auto loan that you owe a balance on and provide payments. Having a good credit history is important because your credit score can impact your ability to rent an apartment, buy a house, or even get a job. A good credit score gives landlords and employers or even lenders the notion that you're reliable and you give payments on time. About 47% of employers run a credit check on job applicants, uh, and 1 in 10 people have been denied a job just due to their bad credit. If you use your credit correctly, it could be a powerful tool to use. For instance, I know people who take advantage of point systems and 0% interest periods to maximize their credit card usage and perks. And when you're looking to apply for a credit card, you can look into what perks that card or the company has to offer. Credit is neither good or bad. It just depends on how you manage your credit and your balances. So there are 4 types of credit. There's revolving, charge, service, and installments. Revolving credit is one where you are given a maximum credit line amount that you can spend, and each month you give a payment to a balance that can be carried over to the next month, which is how most credit cards work. And you make charges each month when you receive your billing statement. Charge accounts are similar to credit cards. However, the amount that you use needs to be paid off every month, meaning you cannot carry over a balance the same way that you would with a traditional credit card. Service credits are when you have an agreement with a service provider to make a payment. For example, your electricity, cell phone, or gym membership. You have an agreement to receive these services in exchange for a monthly payment. And not all service accounts are reported to your credit history. However, if you do start defaulting on your payments or you just stop giving payments, they will report it to credit reporting agencies. And lastly is installment credit, and that is when a creditor loans you a specific amount of money, which you agree to repay with interest in a monthly installment over a fixed period of time. So that is the most common things are car loans or mortgages. So on this page, we're going to focus on prepaid debit cards and secure credit cards. It just kind of gives you the overall picture of what credit cards and debit cards are, but as far as prepaid debit cards, they are not FDIC insured and they do not offer protection. So if you lose your prepaid debit card, it's going to be like losing cash. Secured credit cards are insured by FDIC and they can help you build your credit. So that is a big difference between the two. And so a secured credit card works in a way where, let's say you go to the bank and you ask them that you ask them to open up a secured credit card. The amount of money that you give them as like a deposit is the amount that your credit limit will be. So for example, if you go and you open up a secured credit card with $200, your credit line is going to be with $200. And then at the end, once you decide to, let's say you built your credit and now you're able to apply for a credit card, and so you close your secured credit card, you get that deposit amount back. And this is a way that a lot of people begin to build their credit if, let's just say, they're just starting out. There are some disadvantages to credit. So it is easy to overspend and buy things that we can't afford because we justify making big purchases by saying that we'll just pay off the balance quickly. So that balance grows fast if you're not careful. But most people don't pay off their full balance every month, and they do carry on a balance, leading them to owe more than they originally borrowed due to interest rates that add on to the balance every month. And late payments can hurt your credit score. If you're late or miss a payment, your credit score can drop in points. Non-payment on unsecured debt, such as car loans and mortgages, can lead to collections and wage garnishments. And if you don't pay your debt, the creditor will be able to repossess your car or your home. Non-payment can lead to foreclosure on residential loans. If you are at risk of foreclosure, give DCBA a call because we do have a foreclosure prevention unit that may be able to assist you. A large debt amount can lead to some consumers to file for bankruptcy, and consumers file for bankruptcy when their debt is too big of a burden and it exceeds 40% of their income, and they'll just have difficulty paying it down. It's important to seek advice from an attorney if you decide to file for bankruptcy, because it is something that will impact your credit score and it will stay on your credit report for 7 to 10 years. So before you borrow money, these are some things to consider. Remember that it's cheaper to repay loans in a shorter period because the longer you owe, the more interest is accrued. Ask what the interest rate is. Some credit card companies or lenders offer higher interest rates, which means you will accumulate a higher repayment amount. So when you are in the market for getting a new credit card, just look around and see what interest rates there are offered by different credit companies. Compare your interest rates with other creditors. So you can shop around and see what interest rates are offered. Look at the small print, which will explain what the terms and conditions are. And remember that interest rates could change and your installment loan can increase. So make sure you check your rate often to assess whether it's a card that you want to use or build the credit to. And calculate extra fees in your installment, like administrative fees, late fees, prepayment penalties, and annual fees. So the basics of credit include knowing what your credit report is, understanding your credit report and reporting agencies, and gaining knowledge on credit terms. So what is a reporting agency? It's a credit bureau or reporting agency is a company that collects information from various sources and provides consumer credit information on individuals and consumers for a variety of uses. So the three major credit bureaus in the United States are Equifax, TransUnion, and Experian. A credit report contains your credit history as reported to the credit reporting agency by lenders who have extended credit to you. So the information in your credit report is also used to generate credit scores. Information that can be included on your report is your current credit situation, such as any current open credit cards, mortgages, or auto loans. And it's important to check your credit report annually to make sure the information is accurate. And just a quick note that all three credit reports may not contain the same information because the information on credit reports depends on which credit reporting agency the lender chooses to report your information to. So there are some businesses that you may have to owe, but let's just say they're only reporting to Equifax and not TransUnion. So there's some that don't report to all three, but a majority of businesses will report to all three credit reporting agencies. So here is a very basic sample of what is included on a credit report, but you need to understand what it contains, right? So when you're requesting your credit report, it may look confusing the first time. So you can review your report annually to check all the 5 areas that are here and make sure that they're accurate and that there isn't any suspicious activity so that your credit score won't be affected. So you can review your personal information, make sure it's your name, your address, your occupation. If there's any legal items, such as if you've been sued, like it will be on your public record. Collection items, and on the trade line is any accounts that you have open. So make sure that the accounts that are open are the ones that you have opened yourself. So they're, just to make sure that there isn't any fraud on your account. And then the inquiries is whenever there's like an inquiry for what your credit is. Let's say you wanted to go open up a credit card somewhere, they do inquire your credit report. So just check those inquiries, and if you have any concerns, you could call the reporting agency to dispute it. Some terms to know. So delinquent default credit history file and credit trade line. When an account is delinquent, that means it has not been paid on time and it's late. Generally, delinquencies are expressed as being late for 30, 60, 90, or 120 days or more. Defaults are a result of an account being delinquent for several billing cycles. For example, if a person hasn't paid their bill for months. A credit history is a record of transactions involving the use of credit. And the credit trade line is a credit account. Oh, sorry. So it's a credit account listed on a credit report, and that was shown in the previous example of the credit report. So the best place to check for your credit report is to check annualcreditreport.com. By federal law, the 3 credit reporting agencies are required to provide a free annual credit report. So check your report every, let's say, 4 months with a different reporting agency. For example, you can request your report from Experian, and then 4 months later from TransUnion, and then 4 months later from Equifax. So that way you could check your credit report throughout the year. They don't advertise and they don't sell you products. So once you visit their site, you should be able to answer security questions and request your report. If you're unable to answer those security questions, you should call them because those questions do pertain to you. And if you're not able to answer them, that may be a sign that you're a victim of identity theft. So if you call, they say it can take up to 2 weeks to receive your report. You can visit annualcreditreport.com or call 1-877-322-8228 to inquire about your annual credit report. The statute of limitations for credit reporting are how long items stay on your credit report. Accounts that are in good standing remain on your report indefinitely. A good standing account that has been closed stays on your account for 10 years from the closure date. Later missed payments are on your report for 7 years from the first delinquent payment. Charge-offs and collections are for 7 years from the first charge-off. And a charge-off is when a business decides an account is uncollectible. However, the consumer is still responsible to pay for that debt, and collections will likely to continue on this debt. A debt may be charged off after the lender has tried to collect it for some time. This doesn't mean that the debt itself is erased. The consumer still legally owes the debt, and it can be collected. In many cases, the right to collect the debt is taken over by a collection agency. So bankruptcies, a Chapter 7 bankruptcy will stay on your report for 10 years. Chapter 13 bankruptcy will stay for 7 from the dates that you filed for relief. Foreclosures stay for 7 years. Inquiries stay for 2 years, and repossessions are for 7 years from your first missed payment that led to the repossession. So what is a credit score? It's a three-digit number that's determined by your credit history and usage that lenders use to decide how risky it is to give you money. If you have a higher credit score, the more likely you are to pay back borrowed money on time. And lower scores tend to receive lower credit limit, lower credit limits, higher interest rates, or they could be denied housing or employment. Credit scores can be viewed on the FICO website or Vantage Score. Just a note, Vantage Score was created in 2006 and is jointly owned by the three major consumer credit reporting agencies, which are Experian, Equifax, and TransUnion. Uh, Credit scores vary because different companies may look at different information about you, and they use different formulas for calculating your scores. And scoring companies may also create different credit scores that are used when you apply for different types of credit. As a result, you have more than one credit score. So banks, credit card companies, and lenders may use different credit scores to make decisions about offering you credit. So a credit score is based on a calculation. For the sake of this presentation, we're only going to go over FICO because they are the largest agency. The payment history is 35% and the largest factor of your credit score, such as making your payments on time. The amount of debt owed is 30% of your score, such as owing a large percentage compared to how much your credit line is. And credit history is 15%, which is why some older individuals do tend to have better credit because they have a longer credit history. 10% is new credit that's used, and credit mix is 10% of your score. And it's important because if you only have credit card debt, it can affect your score. But if you have a mixture, for example, like credit cards, loans, or mortgage, it can help improve your score. So they're looking for that diversity. So these are the credit score ranges for both FICO and Vantage Score. They have different ranges for each category. However, the max score possible for either credit reporting agency system is 850. But you could see that they both have like a different range for what they consider like good or very good, but it is somewhat similar. Here's an example of how your credit score can impact you. In this example, those with a higher credit score were offered less interest on their auto loan, which made their monthly payments much cheaper, and the total interest paid less than a person that with poor credit. An annual percentage rate, which is the APR, is the annual rate charged for borrowing or earned through an investment. APR is expressed as a percentage that represents the actual yearly cost of funds over the term of a loan. So for example, if your loan has an APR of 10%, you'll pay $10 per every $100 that you borrow annually. So if you do borrow money, here are some responsibilities to consider. Only borrow what you're able to pay back. The more you borrow, the higher your minimum payments will be, and the interest amount will be considerably more. Read and understand the terms and conditions of the credit contract. This is a task most of us do not do, but it is helpful to read over your terms and conditions, especially if you want to utilize the perks of the card or avoid any fees or charges. Ask questions if you don't understand. So customer service lines are available to answer your questions and concerns. Pay debts back on time. It's important to avoid being sent to collections or getting charged late fees. Try to set a payment arrangement with your creditor if you cannot make a payment on time or pay the debt back. Some creditors are willing to work with you to create a payment plan to pay off your debt owed. And report a lost or stolen credit card as soon as you find out it's missing, so the company can freeze your account to avoid any charges being put on the card, and they'll send you a replacement card. So you are able to have a cosigner on loans. A cosigner takes full responsibility for paying back a loan along with the primary borrower. A cosigner is often a family member or a close friend, and they're obligated to pay missed payments or the full amount if the primary borrower doesn't pay. As a cosigner, their credit is harmed if the borrower makes any late payments, and a person with less favorable credit will have a cosigner to give their lender like additional assurance that the loan will be repaid. So how to protect your credit? To protect your identity and credit, it's important to not share your personal information, especially with strangers. Don't sign or co-sign contracts until you understand all the details. Even if it's someone that you are very close to, it is still very important to make sure you understand your obligations are and what you are signing up for. Check your bank and credit card statements often for unauthorized charges. It is good practice to check your account transactions daily, just to have a good standing of understanding what your money is being spent on. But aside from that, if there are any fraudulent charges, you know right away and you can report them right away. And you review your credit report at least once a year. As of September 21st of 2018, everyone can freeze their credit report for free. You could just contact each credit reporting agency to freeze your credit report. Some alerts that you can place on your account to protect your credit history are the initial fraud alert. So initial fraud alert can be placed if you believe you or someone you know, or you are or you may become a victim of fraud or identity theft. The active duty military alert is available for service members on active military duty who want to help minimize their risk of fraud or identity theft while deployed. An active duty alert is like an initial fraud alert. It can make it harder for someone to open unauthorized accounts in your name. An extended fraud alert. So if you've been a victim of identity theft and you've completed a FTC identity theft report or police report, this alert will be put on your account. An extended fraud alert is free. It lasts for 7 years and removes you from credit card and insurance offers for 5 years. So credit freeze, a credit freeze restricts access to your credit report, which means you or others won't be able to open a new credit account while the freeze is in place. So you can temporarily lift the credit freeze if you need to apply for a new credit card. When the freeze is in place, you'll be able to do things like apply for a job or rent an apartment, or buy insurance without lifting or removing it. And then the credit lock. A credit lock allows you to easily lock your credit file, helping to protect you against identity theft and unwanted credit activity. If someone attempts to apply for a credit card in your name while your file is locked, you'll be notified with a real-time alert. Information that can be disputed on your credit reports is your personal information, the account information you believe is inaccurate or incomplete, mixed credit files, which happens when someone else's information is being reported on your credit file. This commonly happens with, let's say, a father and son that are senior and junior, or if you have a fairly common name, there can be a mix-up of files, so you can dispute that to correct it. You can also dispute a duplicate reporting of an item and information that may indicate fraud or identity theft. And you can dispute charges with credit bureaus such as Experian, Equifax, and TransUnion via phone, online, or through mail. So the steps to dispute discrepancies are to gather any documents relevant to your dispute, which may need to be uploaded online. Start the dispute by phone or mail. Allow the credit agency to do their investigation, which can typically take up to 30 days. Accounts that are actively being disputed will be pulled from your credit report while an investigation is active. A credit agency will then contact the business, and if needed, this is in the case that you're disputing a transaction from the business. And once the investigation is over, the account will either be placed back on the report or removed if it was a fraud or a mistake. So if you are a victim of identity theft, and you can get free credit reports anytime. That's just to make sure you're continuously checking your report to make sure there isn't any continued fraud going on your account. And when reviewing your report, make sure that the information is accurate. So make sure once you make sure it's accurate, then you're in good standing. Just make sure you are checking it every 4 months. Like we did recommend requesting from a different credit reporting agency every 4 months to just continuously have eyes on your report throughout the year. And that's through annual credit report. And a note, instead of obtaining your credit report from all three agencies at once, just spread it out. So you just make sure you're in good standing throughout the year. So improving your credit. To help build your credit without a credit card, you can pay your student loans on time if you do have student loans. Pay them on time. Second is to obtain a secured credit card, which you deposit cash into an account as collateral and then borrow a percentage of that amount for credit. Your use of the secured credit card is reported to credit bureaus. So as you pay your monthly bill, your good payment history helps build your credit, and opening a new account will create a hard inquiry to your report too. So make sure that's something that you're doing sparingly. Third is to ask family or friends to co-sign for you, or four is to participate in lending circles, which we'll discuss in the next slide. And fifth is to ask for credit where credit is due by asking your landlord to report your rent payments or to the credit agencies. Or ask your lender to request an extended view score from Experian, because Experian gathers information from public records and sources beyond credit reports to give lenders a complete picture of your money and credit management habits. And some things to help rebuild credit are to pay your bills on time, keep your credit utilization under 30%. Don't close out old accounts, especially if you're in good standing, if you don't need to. So you can just leave it as a zero balance or do one transaction every so often to keep that account open and active. But if you do pay off a card, don't just close the account, because that can affect your credit. Maintain a mix of active credit trade lines. As we mentioned, don't just have credit card that just you can accumulate credit lines from mortgages or different loans, aside from credit cards, to help build your credit. And have 6 months of good history and activity. So utilize your cards and give your payments on time. And then if needed, get help with debt. So that's like, you can go to someone that you trust or a loved one and see if they'll help you with any repayments. So a lending circle. As mentioned in the previous slide, lending circles can be used to build your credit without a credit card. So a lending circle consists of a group of people who come together to lend money to each other. And this provides a way for individuals to get a loan without paying for interest or fees. Participating in a lending circle helps individuals build their credit scores and learn about money management. A lending circle works by a group of members making the same amount of monthly payments. And then when a person is in need of a loan, they'll request an amount from the pool of money that they've been contributing to, with 0% interest and zero fees. And the program that you're in reports payments to credit bureaus. So the steps to joining a lending circle are just to apply, take a financial education course, and then you join the circle. And when you're giving those monthly payments, and then you request a loan. So your monthly activity is reported, So that can help improve your credit. Lending circles are available through 50 nonprofits in 17 states. So you can visit missionassetfund.org to see which lending circles you'd be interested in joining. It is a very interesting way to receive a zero interest, zero fee loan. But it is a beneficial way of building your credit if it's something that you're interested in looking into. So watch out for credit repair companies, because when building your or repairing your credit, just look out for these possible like scams, uh, or just warning signs. Um, some warning signs are when the company tells you not to contact the credit reporting agencies, or they ask you for an advance fee because it's against the law for credit repair companies to ask for advance fees because they're the ones that are supposed to be completing that work. Um, if you aren't given a contract or they don't explain your legal rights. They also make promises such as getting you your like a new credit identity, or they tell you that they can remove information from your credit report, even if it's an accurate reporting, right? Because you can't just remove items. So buy now, pay later credit is a type of deferred payment option with no interest. It allows the consumer to split a payment into installments, typically four or less payments, often with a down payment of like 25% due at checkout. This is something that we've seen more of, especially whenever, let's say you're doing any online shopping and you go to checkout, there will be like an advertisement for a company and they'll tell you like, oh, pay this much now, and then in 12 payments of let's say $12, you'll pay off this amount. So that's something that we're seeing more often. And it's usually when you're checking out on a purchase online. Um, and then the application process is quick and it requires little to no information, and the lenders don't always check for credit. So if you are someone that has ever used that service, you'll know that it's so easy to um, check out your cart and pull out this loan at the same time. It takes practically minutes. And payments aren't reported to the credit bureaus, but so if you're making those payments on time and you're doing a good job at it, it's not reported. But as soon as you stop giving payments or as soon as your payments are late, they'll start reporting that to the credit bureaus, which will negatively impact your score. And this is also a way for companies to harvest and collect your data and for consumers to just accumulate debt because they're purchasing items that they may necessarily not have the funds to pay up for upfront. So people are just finding it easier to do some shopping and accumulate this debt because it's like, hey, they're usually advertising it as like giving very low monthly payments back. So it is very enticing. So that does it conclude our presentation on understanding credit and credit reports. If you have any questions, please leave them in the chat box. I do see that there have been some questions coming through, and my associates have been responding and answering. But if you do have any questions, go ahead and put them in the chat box and we'll answer them the best we can as time permits. Um, Before we get into questions, here are a few financial resources that we wanted to offer, just provide information. So VITA is a volunteer income tax assistance program that provides accurate, free, and trustworthy tax preparation. The tax preparers are knowledgeable and they're IRS certified, and their tax filings are over 90% accurate. Before they submit your tax filings, it's reviewed by a second preparer to ensure for accuracy. It is a free service for households earning less than 60,000. The amount may have changed. So to check out for VITA services, you can visit freetaxprepla.org to view the map. and make appointments. So once you go on that website, there's a map on there. You put in your zip code and it'll show different VITA service providers near you. And it is a free service, so it's useful if you know anyone that can benefit from that program. And there's also free online tax preparation services through United Way and Code of America. And IRS also has a system where you can go do your tax filings for free. You can visit getaheadla.org to view free programs that include financial counseling, debt management, housing assistance, and free tax prep, and including all the other services that are listed there. You can visit the website or give a call for more information.